Let me ask you a question that I genuinely cannot stop thinking about. In 2017, XRP hit nearly $3.84. No banks were using it. No institutions were building on it. No legal clarity existed. No ETFs. No partnerships. Nothing was built yet. Fast forward to today, 2026. Ripple has banking partnerships in over 40 countries. JP Morgan just settled a tokenized US Treasury redemption on the XRP Ledger. The SEC case is resolved. The Clarity Act is moving toward July 4th. Legal clarity finally exists. Exchange supply has collapsed to the lowest level in 8 years, and XRP is sitting at around $1.10. How does that make any sense? Today I'm going to walk you through exactly what has been holding XRP back, and more importantly, what is quietly being built right now that most retail investors are completely missing. Because if you understand this, you stop panicking at red candles, and you start seeing this moment for what it actually is. This is not doom. This is the setup. Let's get into it. Welcome to XRP Verified, your daily source for honest, no-fluff XRP analysis built specifically for the US investor. If you're new here, hit subscribe and turn on notifications so you never miss a daily update. Let's go. All right, let's start with the question that every serious XRP holder in America has been asking for months now. How is it possible that every single piece of news around XRP is improving? Partnerships expanding, regulatory clarity arriving, institutions building on the ledger, and yet the price is still bleeding. The answer requires understanding 4 specific things that have been working against XRP over the last several years. And when you see all 4 together, the picture becomes very clear. The first one was the legal battle. On December 22nd of 2020, the SEC sued Ripple Labs. The case was filed by the outgoing SEC chair on his very last day in office. One day before he was set to leave, he filed the largest crypto enforcement action in SEC history. Now ask yourself, why XRP specifically? Why was Ripple the first and biggest target? Because in 2020, Ripple was the only crypto company with real banking partnerships actively competing with the SWIFT network across dozens of countries. It was the most credible institutional threat in the entire crypto space, and it got hit first. After that, the legal template the SEC used against Ripple was applied to Coinbase, Kraken, Binance, Robinhood, dozens of others. But here is the part that matters. XRP held the line. After 4 years of legal battles, Ripple settled with the SEC. XRP was cleared as a digital commodity, and one by one, every other case built on that same template got dismissed. Gary Gensler is gone. Paul Atkins, who is crypto-friendly, now leads the SEC. The legal attack failed. The second thing working against XRP was something called debanking. Starting around 2022, crypto firms across the US began quietly losing their banking relationships. Not through public announcements, but through informal regulatory pressure on banks to cut off crypto companies. A 50-page congressional report later confirmed that over 30 crypto firms had been systematically debanked. But the Trump administration shut that program down. That attack failed too. The third pressure point was the lobbying war. Major financial institutions spent millions of dollars lobbying Washington to stop crypto-friendly legislation. Senator Elizabeth Warren alone filed over 40 amendments trying to gut the Genius Act from the inside. Most got blocked. The Genius Act passed anyway. Then the Clarity Act, which passed the full House with a vote of 294 to 134, with 78 Democrats crossing the aisle, is now heading to the Senate floor, with the White House targeting July 4th for it to be signed into law. The banks fought hard. They lost the committee vote. The legislation is moving forward anyway. So, 3 attacks, 3 failures. Now let's talk about the 4th one, because this is the one happening right now, in real time, while you're watching your portfolio. This one is about how institutional money actually moves. Here is something most retail investors don't realize. Large hedge funds and institutions don't buy XRP the way you and I do. They don't log into an exchange and hit the buy button. They go through what are called dark pools and OTC desks, private trading venues where massive transactions happen completely off the public order books. What that means in practice is this: institutions can quietly accumulate enormous amounts of XRP without the price on your screen ever moving. The chart stays flat or even drops, while billions of dollars worth of XRP is changing hands behind the scenes. And here is the data point that should make every XRP holder stop and think. XRP supply sitting on exchanges has dropped from approximately 4 billion tokens down to around 1.6 billion. That is the lowest level in 8 years. Someone is taking XRP off the market, quietly, systematically. While the chart looks dead, that is not a random coincidence. That is accumulation. Now here's the part of today's video that I think is the most important, and it is the part that changes how you see this entire situation. Why would institutions accumulate XRP quietly while keeping the on-chart price suppressed? Think about it like this. You don't open a brand new highway to traffic before the asphalt has fully dried. You don't open the floodgates before the dam is finished. You don't let the pressure release before the infrastructure is fully in place. And right now, the infrastructure is being built at a pace that is genuinely remarkable. JP Morgan's Kinexys platform just settled a tokenized US Treasury redemption on the XRP Ledger. The trade cleared in 5 seconds. That same trade through traditional correspondent banking takes 1 to 3 business days. BlackRock is building tokenized treasuries. Ondo Finance is settling on the XRP Ledger via RLUSD. The DTCC, the organization that settles trillions of dollars in securities every single day in the United States, is preparing to launch tokenized securities. ISO 20022, the global financial messaging standard that XRP was built to be compatible with, completes its migration at the global banking level by the end of this year. Every major bank communicating through the upgraded system. Every one of those banks connected to rails that XRP was designed to run on. Each one of these is another piece of the launchpad being built quietly while the retail price chart sits there looking like nothing is happening. So let me give you the full picture as it stands today. The SEC case, settled. XRP cleared as a digital commodity. The Genius Act, signed into law by President Trump in July 2025. The Clarity Act, passed the House 294 to 134, advanced through the Senate Banking Committee, targeting July 4, 2026 to be signed into law. Exchange supply of XRP, lowest level in 8 years at approximately 1.6 billion tokens. Institutional inflows into XRP funds, $132 million in May 2026 alone, even as the price was falling. JP Morgan, building on the XRP Ledger right now. BlackRock, Ondo, DTCC, all moving toward tokenization infrastructure that connects to XRP rails. And the current price? Approximately $1.10. You tell me. Does any of that math add up if this story is over? Does any of that suggest that the people with the most information and the most money think XRP is going nowhere? Now I want to be completely honest with you about the short-term picture, because this channel is not about telling you what you want to hear. XRP's chart is not strong right now. The RSI is sitting near 27 to 29, firmly in oversold territory. We are trading below all major moving averages. The 1.05 to 1.10 zone is the support that needs to hold. If we lose that level on a sustained daily close, we could test the psychological 1.00 level. Macro conditions are also not helping. The Fed is expected to hold rates high. Geopolitical uncertainty is elevated. These are real headwinds for all risk assets, including crypto. I am not telling you to ignore the short-term risk. Managing risk is part of being a smart investor. But what I am telling you is this. The short-term chart and the long-term fundamental picture are pointing in completely opposite directions right now. And in every market, in every asset class throughout history, When that divergence exists and the fundamentals are strong, it is the fundamentals that eventually win. The people who built generational wealth in early Apple, in early Amazon, in early Bitcoin, they were not the ones who sold because the chart looked bad in the middle of the accumulation phase. They were the ones who understood what was being built and stayed patient long enough to see it through. Here is your full update summary for today. XRP is trading around $1.10 to $1.13. The RSI is near 27, oversold. Key support is $1.05 to $1.10. First recovery target is $1.20, then $1.35, then $1.45. Exchange supply is at an 8-year low of approximately 1.6 billion tokens. Institutional inflows were $132 million in May. The Clarity Act is targeting July 4th. JP Morgan, BlackRock, and the DTCC are all actively building on infrastructure connected to the XRP Ledger. 3 of the 4 major pressures that held XRP back over the last decade have already failed. The 4th, price suppression during accumulation, is the one happening right now. And historically, accumulation phases end when the infrastructure is ready and the institutions are done loading up. That moment has not arrived yet, but the evidence suggests it is closer than most people think. Stay patient, stay informed, and do not let short-term red candles make long-term decisions for you. If today's breakdown gave you a clearer picture of what is actually happening with XRP right now, hit that like button. It helps this channel reach more investors who need real analysis instead of hype. Subscribe and hit the bell for daily updates. I'll see you tomorrow. Stay sharp, stay patient, and as always, stay verified.